Good morning. Today is Sunday, May 18th, 2025, and this is the weekly Bitcoin price forecast. So, looking at where Bitcoin went in the last week and where it could potentially go in the future. So, we're in May, and it's absolutely ripping. April was I guess, a surprise month for Bitcoin. Not quite a surprise because it really went down to the levels that you were expecting it to. Dropped down to 75, which is a very strong level historically, going all the way back to 2021. And you see it just reverse from there. It came down here. That's fine. Sometimes price moves, and then it just shot up and closed at a very high level at the end of April, getting all the way back up to about 95,000. And at this point, we are at 104,000. So it literally jumped, 10,000 within the span of, we're 18 days into the month. So halfway through the month, you're up 10,000. So that's pretty good on Bitcoin for sure. And we see it looks like the monthly candle is probably going to end up closing above any of the other previously monthly candles. So that's definitely a bullish sign for sure. We still have 12 more days in the month left, but just based on the trajectory that we're seeing right now, it could be pretty good. Upcoming week could be interesting. We'll see how that ends up playing out. But overall, I think this momentum, if we're just looking at the monthly chart, looks pretty solid. So weekly chart, let's see what we got here. So we see that this whole pattern has pretty much been completed. You ran up and you came all the way down here, enough to clean up literally all of this area right here that was not reclaimed. Price came up, it came down, and now it's headed back up to the upside. You'll face some resistance here, and we'll put the drawings on in a second to show exactly why there'll probably be a little bit of resistance. But again, like I said last week, once you start getting above 25,000, 120 or 125, it's just going to absolutely keep ripping because there's not going to be anything that holds it back other than at that point, demand will really take over from supply at that point. Like, there's not going to be enough supply to contain all the demand, so that means price is going to have to move pretty quickly. I also talked about last week how it's like we're kind of in this stair-step pattern at this point. So that first week of April, kind of tariffs and everything, price shot down all the way to 75,000. That was always possible. And the next week, it did nothing. Then the next week, it shot off. Around Easter. Then it paused for a second. Then it had another rally, a huge rally the following week, and then this week it just paused. So it's kind of following that stop go pattern at this point. But now we're at the top of this area too. So I think you'll have a lot more go than you will stop. But like I said, it'll probably be continue to slowly step up until you break that 120 area, and then it'll just keep going. So take a look here, put the drawings on. We're above the short-term holder realized price, so that's good. This tends to hold price above it. There are absolutely times when price will dip below this short-term holder realized price. But overall, that is probably one of the things that holds it up pretty well, especially when you're in a bull market, which I've always been saying that we absolutely are. We've gotten through the slow stages at this point, and now we're about to see that type of exponential motion that really does kind of carry a lot of the price action for the whole cycle. So we got a couple things going on right here. We see this. We're kind of testing that current all-time high at this point just to see that zone has to break above there, which is about 109. So about $5,000 more to get up there. You still the place I get this 120 from is if I look at this channel that it's been in since literally October of 2023. It's just bounced up and down this channel. So it'll get up to, at this point, if we're looking about 120 or 125, and it'll probably face a little bit of resistance there, but it should knock through that pretty well, or get on the other side of it and then come retest it one more time. But I do believe that this is going to be that one final push that gets it out of that zone and starts to put it into that stratospheric type of atmosphere, pretty much. So the only other thing that I look at right here in terms of major resistance in this area is what I call it's kind of like this escape velocity line. So this one's exciting. Essentially what ends up happening here is you have this line pretty much follows the peaks of Bitcoin, and you see these peaks get higher and higher and higher. And finally, okay, so we're testing this line right now. And once it gets above there, it'll do, if it gets above there and closes, has a strong close, it'll do something that Bitcoin has not done in over a decade, actually. And actually, it's never done it. But it would be above that line. And so at that point, it's in new territory. And things start to move really fast because it's not contained anymore. So again, that's all good. I keep talking about supply and demand dynamics and how demand is absolutely going to take over supply, even if it's been a really slow churn, because it has. But yeah, no, that's all good. Price is still looking fantastic. Like I said, it may be a couple more weeks. I don't have a crystal ball, but if I'm just looking at this right here, that looks pretty good. Daily chart. Let's see what that looks like. I told you it's literally just a stair step. It's you have a week or two. You have a week where it does a whole bunch, then it goes absolutely flat for a whole week. Then you have another week where it shoots up. It goes absolutely flat for a whole week. 2 or 3 days where it shoots up absolutely flat, and now we're at this top area. So we may see one more shoot up to where it just bursts through this current all-time high, that escape velocity line, and then that gets up to the top of that channel. So those are literally the last 3 hurdles before you can actually really take off without any type of hindrance. So good to see for sure. Let me turn do I have any, where are the moving averages? Let's take a look at that. I don't know why I took them off. Change those real quick. So this should be a 50. That's what I was missing, my moving averages. Change this to a little bit thicker. There we go. Leave that as that. We'll make this a 100. And then finally the 200 moving average, 200 day. And we'll just see like where price is relative to the moving averages, because at this point it's looking pretty good. It's super bullish in that regard. So let's see right here. That did not work the way I wanted it to. It did work the way I wanted it to. That's cool. All right, so at this point, price is above on the daily chart the 100, 200, and 50 moving averages. So, and they've all crossed above. You had this cross in May of this year. May 2nd, you had this moving average cross. It's a golden cross, and that is super bullish for the overall space at this point. So all those moving averages is curved up. On the weekly chart, we see that the 50-week moving average, that served as a huge defense for this area. I mean, I knew this was going to be protected pretty strong because you had the 50-week moving average. You had the bottom of this channel, which is, if you hit the bottom of the channel, you expect it to go up. You also hit the bottom of this uptrend channel, which, tells that it'll probably go up, and it reacted exactly in that manner. So that's good to see. Monthly charts. The moving averages aren't even worth considering there. They're way back down at like 52K. And there's quite literally no way that Bitcoin's going to get below 70 at this point. Not anytime soon, or really anytime ever. It's just there's too much demand. Even on the 4-hour chart, we see it's just absolutely bouncing off of this 4-hour moving average, which tells me that we should start to see some type of upward action. I mean, worst case, maybe a dip down to the 100 back to test 100K one more time. That's super possible. But it also gives credence to it moving up. So I think that's it for the charts. Only thing in the news that happened this week was inflation, which the inflation numbers look like they cooled one more time. They're expecting 2.4% year-over-year inflation, but they got 2.3. So it's, another reason to lower interest rates. We'll see how this goes, but realistically, I think they should be lowering interest rates pretty soon. We'll just have to see, because there are some other things that maybe 1 or 2 more big things that happened this week that could make the whole kind of credit markets interesting. So I started looking at consumer sentiment too. Like, how do people feel about the market and whatnot? Just overall consumer sentiment, whether it be prices of things, or really, that's what it really comes down to, the buying patterns of different people. So we see in 2020, after COVID, it dropped off to a cliff, like 70. It kind of recovered to 85%. 85% of people felt good about things. And then going into 2022, mid-2022, it dropped down to 50%. And somehow we see we're at that same level of consumer sentiment. So it's definitely people are not feeling too great right now, especially with the tariffs and whatnot. But that is really pretty much the lowest. Let's see if it's ever gone any lower than that. 2011. Yeah, it's interesting. This is pretty low for consumer sentiment, if we're taking this at face value and saying that these numbers are correct and whatnot. But yeah, that is telling for sure. Which I'll talk about a little bit later. But I think that the institutions are going to be leading this cycle, especially with the price action. But just interesting to always look at those numbers. The other big thing that did happen this week, which can also affect sentiment, is Moody's, so they are a credit rating agency. So for the first time in history, they've downgraded the U.S. credit rating. It cites concerns over soaring U.S. debt levels, which is very true. That's always been part of the overall thesis is that, hey, the overall currency situation doesn't look great in the U.S., which leads to lending and borrowing patterns. So these are the rating agencies. There's three of them. There's Moody's, which they just moved recently, at the Standard & Poor's, S&P, and then the Fitch rating agency. So Standard & Poor's, right after the great financial crisis in 2011, they downgraded their ratings from AAA to, what is that, AA plus, a little bit lower. And then, who was this? Fitch, they did not lower theirs until a little after COVID. So 2021-ish is when they did that. So they downgraded again from AAA to AA plus. And then the Moody's, which they have never downgraded, they just downgraded to AA minus, which somehow is greater than AA plus. I'm not sure how that works, but yeah. So they did a smaller downgrade than the other two agencies, but I mean, still to see something like that, it is interesting. The timing is interesting. Especially as we're going into June, and there is a lot of debt that the U.S. is going to have to. What are they going to have to do? They're going to have to basically come to new terms on that debt, essentially. So, yeah, well, I don't know if this will play that much into effect because obviously they're taking an average of the three and seeing kind of what that looks like. But that is, considering that hasn't happened before, something to pay attention to. Also in the S&P at this point, Coinbase. That's, again, that's one of my favorite stocks, actually. I think they're going to do well. They made a tweet on the 12th. As the saying goes, first they ignore you, then they laugh at you, then they fight you, and then they add you to the S&P 500 or something like that. So Coinbase has just been added to the S&P 500. They are the first crypto company in history to do so. So, I mean, that's definitely exciting for the space. They are pretty much the golden child for America when it comes to crypto custodial services and crypto exchanges. So, I mean, it was kind of inevitable at a certain point, which, definitely good to see. And they actually ended up replacing Discover on the S&P. So one financial company ended up replacing another. And I think you're going to start to see a lot more of that evolution in the coming probably 3 to 4 years and more companies being adopted in that manner. But yeah, shout out to Coinbase. They did end up disclosing that they had some type of hack too. So I'm not going to paint it all golden, but that's something that they'll have to work through as well. But as for now, this is going to be a growth stock for sure. Something that will, definitely appreciate over time, especially with this addition to the S&P. It'll just, I don't know, it'll appreciate because of that inclusion. And then finally, kind of the thing I was talking about earlier is that, I'm looking at the change in ownership, who's owning Bitcoin over time. And really, at this point, I mean, it's pretty clear that you have a lot of institutions buying in, a lot of funds and ETFs. So, I mean, the Wall Street types, which, that could include Bitcoin mined or just, off exchange or whatever it might be, peer-to-peer. You see a lot more governments now owning it, 19,000 added year to date in 2025. So the portion that is decreasing is individuals. So individuals like me and yourself, their share of the overall pie has decreased significantly in 2025. And some of that comes with, hey, maybe you're a forced seller. Maybe you had to sell because, something happened in your life. I don't know. Life is getting expensive for sure. But I don't know. It's interesting to see the different kind of changes of the guard pretty much and who held it up. So for the first couple cycles, it was all retail based. That was when, you couldn't get institutions to touch Bitcoin. But now Bitcoin is definitely appreciating more and more. And it has caught the eye of a lot of the big players and the people with money. So I just expect to see that trend to continue, really. I think you'll see a lot more retail investment as you get higher and higher prices. That's just, for whatever reason, that tends to be how it happens, at least historically. You see Bitcoin run up and then people get excited and then they buy, and unfortunately that ends up being closer to the top. They call it exit liquidity. So ideally you want to get in as soon as possible, or at least have some type of vehicle to ride the volatility on the way up. But yeah, no, I mean, something that you want to get in the space, if not Bitcoin, then whatever cryptocurrency that you're looking at. I mean, I wouldn't recommend it too much outside of Ethereum and Solana. And even Ethereum's been kind of shaky over the last year or so. But Bitcoin, Ethereum, Solana, anything on the base network, those are all good. But you just want to be exposed to the volatility. So other than that, I don't really have too much else. I mean, this has been not a boring week, but there really wasn't too much. But I do think we'll see a lot more excitement going into June before the summer gets here officially, and then. I don't know. A lot of moving parts and a lot of balls that are being juggled in the air. So this has been Chris Talks Crypto. Check out any crypto-based resources on christalkscrypto.com. And other than that, I will see y'all on the moon. Take care. Bye-bye.